Some real estate investment trusts, known as REITs, are still on sale across the market, and this is largely due to the fact that the Federal Reserve has still not dropped interest rates, and likely won't drop interest rates at least to favorable levels, at least still for some time. Now, because of this, some real estate investment trusts could be offering a massive buying opportunity for those investors that are interested in having exposure to real estate and willing to wait for interest rates to drop back down, and most likely see this entire sector explode. Now in this video, we're going to go through 5 different real estate investment trusts that all, in my opinion, are offering a buying opportunity as of right now. So if you're interested in REITs, getting some exposure to real estate investment trusts, make sure to stick around, drop a like down below, and let's go through the first one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So the first real estate investment trust that I personally think could potentially be offering a buying opportunity for some real estate investors looking for some upside, along with those investors out there looking to get paid along the way. The REIT that we're talking about is Vici Properties, or ticker symbol VICI. Now, the outlook for Vici Properties is probably familiar if you are a dividend growth investor, but for those that don't know, Vici Properties was created in 2017 when Caesar Entertainment controversially spun off a significant portion of its real estate assets as part of a casino operator's bankruptcy proceedings. Now, Vici is in the specialized REIT space because, of course, Vici does own casinos and properties like that. And this is definitely sort of a controversial REIT, whether or not investors want exposure to specialized gaming like this, to a specialized REIT like this that specifically invests in gaming properties. But with the way that Vici has been trading just as of recently, it's crossed my radar once again, as I currently own hundreds of shares of Vici across my portfolios at an average cost of around $27. I think I've held Vici for a few years now, and now with Vici dropping down in the mid 28s, it's starting to get my attention again. Now with Vici trading where it is currently, we're talking a 5.83% forward starting dividend yield, which is not bad whatsoever. Vici does have a little bit higher beta than some of the other REITs we're going to talk about in this video. And as far as simply safe dividends goes, Vici's dividend safety is a 50 or borderline safe, which in my opinion I think is being a bit harsh. But to be fair, I do not think that Vici has necessarily the safest dividend across the entire REIT sector. Now, one of the main things that really interests me when it comes to Vici is, of course, the growth potential in the actual stock price return, because this is a relatively new company. But on top of that, Vici has offered some extensive dividend growth historically so far. And although we only have a few years to go off of, we're talking 5 years of straight dividend consecutive increases. And the increases are not small by any means. We're talking a 6.4% in the latest year. Now, I know some stocks across the market do grow their dividends faster than this, but for REITs, that's not bad whatsoever. Now, is Vici my favorite REIT across the entire market? No. Is it a REIT that I would want to own a ton of? Not necessarily. But do I think there could be some price return growth potential along with more dividend growth in the future? I definitely think that Vici has the potential to do so. So if you want some exposure to real estate, especially specialized REITs, check it out. The next REIT that's potentially offering a buying opportunity, not the best one that we've seen in the last few years, but potentially a decent one, is N REIT, or ticker symbol NNN. Now, N's been in my portfolio for several years now, and I like the fact that this REIT owns some super high quality real estate with very familiar tenants that we're not going to go through in this video specifically, but definitely in your own time, check out their portfolio. You're going to like what you see. Now, this REIT owns over 3,000 properties, so it's a lot smaller than that of Realty Income, which also means there could be more growth potential in my opinion. But with N trading in the 40s, once again, we're seeing a 5.54% forward yield, an 80 on the dividend safety score, so N REIT is said to be had a very, very safe dividend, which I love. Now, as far as dividend growth goes, we're talking around 3% more or less every single year, which isn't horrible. It does somewhat keep up with inflation, depending on who you ask. But if you get in at the right time and have a 5 or 6% starting yield, those 3% raises over time are going to add up. More on the dividend though, 34 years of consecutive increases, 36 years without a reduction. This is one of those single stocks that I've had in my portfolio for several years now that I don't really have to worry about, don't really think about. It sort of trades within a range over time. And although I do think there are other REITs that might have more growth potential, this is definitely a good sleep well at night REIT if you ask me. The next REIT that's definitely offering a buying opportunity as of right now, in my opinion, is Agree Realty, or ticker symbol ADC. Now, ADC is one of the highest quality REITs across the entire sector, if you ask me, and this is simply because of Agree Realty's tenants. Now on top of that, Agree Realty doesn't normally yield much over 5%, but as you can see right now, over the last 5 years, there's only been a few moments in time where it has, and as of right now, it is. So 5.2% starting yield, a very safe dividend, a relatively low beta, and the fact that Agree Realty has paid dividends for 12 years straight without a reduction. Now Agree Realty over the last year has not raised their dividend all that fast, but over the last 5 years, a 6% per year average, which is not all that bad whatsoever. On top of that, with Agree Realty, it does pay a dividend monthly, which some cash flow, more income-focused investors love. And just the reality that there could only be a few potential opportunities to lock in high-quality names like Agree Realty, like Triple N REIT, like Realty Income, a lot of these names that are accidentally high-yielding much, much more than they have on average. Definitely dig a little bit deeper into Agree Realty's portfolio and them as a company. This is definitely one you're not going to want to miss. The next REIT that's offering a potential buying opportunity and also one of the holdings in my portfolio long term is Extra Space Storage, or ticker symbol EXR. Now Extra Space Storage is obviously in the self-storage REITs. So if you want exposure to self-storage, this is definitely one you're going to want to look into. Now, because of the way this stock has been trading, it is offering almost a 5% starting yield. And when I tell you this one has the potential to move up in price, in my opinion, it definitely does. Not to mention EXR has an 80 as far as dividend safety goes, an 8% dividend growth rate on the last year, 14% on the last 5 years, 16% on the last 10. So as of right now, buying some shares of EXR, locking in just below a 5% starting yield, not to mention the potential for growth as far as share price, and along with that dividend growth, which has been substantial. EXR is world-class as far as self-storage, if you ask me, and this has been a holding in my portfolio for several years now, and I'll definitely add some more shares if it drops a little bit lower in price here. Now, the last and final REIT that I personally think is still offering a buying opportunity, yes, I always have to include my favorite in every REIT video, is ticker symbol Realty Income, which is still currently trading in the low 50s, and I think is going to be trading above 60 very soon here. Not to mention with where Realty Income is trading currently, we're getting a 5.74% forward yield, along with a very safe dividend, basically as safe as it comes across all the REITs. And a 3 to 5% on average dividend growth rate, which isn't horrible, not the best, but it is consistent. Realty Income is my largest position across my entire portfolio as far as a single REIT, and is definitely a single stock position that I'm going to continue to add to until I probably have 3 or 4 or 5,000 shares long into the future. Now with the Realty Income, along with all the REITs, are there short-term headwinds that investors need to be wary of? I definitely think that is the case. But for longer-term investors looking to lock in a nice starting yield, get paid along the way, and wait for the price to return to normal levels, I think Realty Income, along with most other stocks we talked about in this video, definitely all have the potential to do so. So there we have it, guys. 5 different real estate investment trusts that I think could all be offering buying opportunities as of right now. And also, as a side note, I think are going to explode once the Federal Reserve lowers rates and debt becomes cheap once again. Now, out of all 5 of the REITs we went through in this video, if you could only buy into one, which REIT would it be and why? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.